GoldMarketStrategy.com.
Hello again, this is Chris taking a look at your upcoming week in the world's financial markets. In front of you is the economic calendar, and as you can see, Sunday, right away, we kick off with something that it's a little difficult to quantify its effect on the market, but it does have importance. HSBC Manufacturing PMI basically will show the Purchasing Managers Index coming out of China, but this is not a government number. This is done by the bank, so people tend to put a little more importance on it and a little bit more trustworthy. Having said that, its effects on the markets isn't necessarily a direct correlation. It is a sign of how much risk can be taken. So if it's stronger than anticipated, it suggests that the Chinese are producing more, and if they're producing more, then that suggests that there's more demand, etc., etc. Monday's pretty interesting because we have PMI all across the board here. Europe, the United Kingdom, and the United States. That certainly will move the stock markets in each of those countries, and therefore we think that it's going to be a fairly significant day. An interest rate decision in Australia that will affect the Australian dollar only, probably not a big mover. The Tuesday session has construction PMI out of the UK, listed as a high-level event. Don't really think it's going to move the market. If it has any effect, it'll be in the FTSE. The Australian GDP quarter over quarter comes out later that day. That could be a general risk on, risk off type of announcement, but again, probably not a big deal. The ADP numbers come out on Wednesday, and that will be the entire focus. The ADP numbers are, for those of you not in the United States or familiar with it, ADP is a temporary employment and regular employment firm that does, I believe the name is actually automatic data processing or something to that effect. And what they do is they process paychecks. So the theory is that since they are the largest paycheck processing company in the United States, that as demand goes up for their services, there are more jobs. So it's a little bit of a harbinger in what you can see possibly on Friday for the non-farm payroll numbers. Interest rate decision coming out of the UK and the European Union on the session on Thursday. No changes expected. Pay attention to the press conference, though. If the Europeans get creative on how they loosen their monetary policy, could be a little bit ugly for the euro. And then, of course, the granddaddy of them all, non-farm payrolls out of the United States on Friday. Unemployment rate, that will be the focus of the market probably most of the week, truth be known, especially as we get to about Wednesday. The markets typically will start to look forward to that. Looking at the S&P 500 weekly chart, you can see that we certainly had a positive week. Now, this was Thanksgiving week, so there was a couple days there that really weren't even worth mentioning. You look at this, you can say, hey, we're at the top of a channel, maybe a little of a pullback as expected. Would not be surprised to see this market drop a bit during this week. We're just getting a little bit overextended at this point. You can see that we certainly have had a significant bounce. 2000 should be supportive, so not a big surprise really if we pull back a little bit. Really not looking for anything major, and we think that buying calls after pullbacks would be the way to go, not trying to buy puts and get cute and go against the trend. The DAX has had a very positive week, but our biggest concern now becomes the 10,000 level. That was an area that was pretty resistive in the past. Now, we're not suggesting that we can't break through there. In fact, we actually expect to see it. The question is do we need a pullback first in order to go higher? Probably. With this type of parabolic move, it looks like we might need a little bit of a pullback to gain momentum. However, if we get a daily close above the 10,000 level, then we feel that the market is broken out to the upside and is going to continue going higher. Gold markets took a little bit of a beating during the week, struggling right at the 1200 level, which is where you would have anticipated something happening. Looking at this chart, we do have some hammers just below those, so we need to break below those to be comfortable selling for any real significant amount of time. Rallies along the week will probably be selling opportunities, but those are short-term options only. We'd be buying puts for some of your, depending on what broker you use, some of your 5-minute, 15-minute type varieties as they tend to run out of steam, the buyers that is. Ultimately, we do expect gold to break down. It's just going to take a minute here. And finally, the euro dollar, you can see that it's been consolidating in this general vicinity. We believe that rallies still offer put buying opportunities, but we don't expect any major movement out of this area. When we do finally move, though, we expect this pair to drop somewhat significantly. Maybe not precipitously, but we're looking for a return to here, basically right around 120 and a half. Could take a minute to get there, though. You can see we are certainly running into some trouble here where we get more and more jagged movement. So expect more of the same. Put buying opportunities on short-term rallies will probably be the way to go, much like the gold market, quite frankly. And with that, I've taken a look at the upcoming December 1st trading week.